Welcome to the STOKR web series. Thank you for joining us. This is the place where we discuss about the future of capital markets, the future of financial technology that will change capital markets that we know today. Today we have a very special guest, one of my close friends from this industry, Tobias Seidel. And Tobias is also my co-founder at STOKR, and he's joining us from Luxembourg.
Hi, Arnab. Great to see you.
Hi, Tobias. Nice to have you. Hope you're doing good today.
Yeah, thank you very much. I'm fantastic.
Good. So if you are from the financial markets industry or from the fintech or blockchain and you are trying to create some kind of entrepreneurial venture into the capital markets industry, this talk can be very interesting. So stay tuned till the end, and there are some small interesting surprise that we have for you that you can take it with you after this talk. Tobias.
Thank you, Arnab.
So there are a lot of developments happening, right, in the last few weeks, which you have seen, right? We saw in Germany, you have a draft law that is proposed. You have in Luxembourg 2 weeks back, something came out that is also talking about dematerialized share. And France and other regulators, Liechtenstein and others are also doing quite a lot. And people
absolutely.
for example, who are following this industry, from an industry perspective, coming from the traditional finance space or coming from, from fintech space, trying to look into the capital market side, you can really get puzzled what is going on, right? Why so many regulators are coming. If you can give a quick rundown, what are the regulatory things that are happening in Luxembourg and Germany in this specific sense in the last few weeks, that will be really helpful.
Yeah, and I think it's quite remarkable, right? We're in the middle of August and we're in the middle of a pandemic, and the legislator in Luxembourg and Germany and also others are thinking about how to make blockchain available for security tokens, and I think it's great and it's very positive. Looking into the laws itself, I think they're less revolutionary in the end as they seem to be. So the German law is, for example, very limited to a very specific type of instrument. It's a debt instrument, but it's obviously a beginning. And in Luxembourg, they changed actually the dematerialization. Dematerialization exists already for a long time in Luxembourg, I think since 2013. And now they just added that you can also use blockchain, or precised actually, that you can also use blockchain to maintain the book entry rights, right?
Yeah, I think if you're not coming from the European legal side, and for the audience who are not coming from the European legal side, I think there may be a question, how the European legal structure works. Is it the amendment that is happening on the national level is also, you can passport it, or what you say, you can also sell the same instrument in Luxembourg when it's issued from Germany, or you are seeing some amendment that is happening that will ultimately affect the European amendment. And
yeah, that's a very good. I think that's a very good. That's a very good point, and it's also a very good observation. And that's maybe also one of the problems we have, right? Because when every legislator, a national legislator, is coming up with its own security token laws and how to deal with them, there is no harmonization all over Europe. And what is the value proposition of having your European Union with a large investor space, and also a lot of small and medium-sized companies who needs financing, when we don't have an harmonized law, right?
Yeah.
So this is one of the main points, and I think the idea is to have something which can be used all over Europe and not only in one jurisdiction, right?
Yeah. Yes, and I think that this is very important, because when we are talking about this kind of digital securities, which are fully native digital securities issued maybe on the blockchain, if you take away this cross-border element, the entire value proposition goes away, right?
Yeah,
I will not talk about the value proposition right now, but that's actually, I think you put the right point, is if we don't have a harmonized approach, this national structure may not bring that value that the technology is promising.
Yes, and I think we definitely need a European approach on this, and also when you look into the law, for example, in Luxembourg, the dematerialized law, what they have now proposed, is still that you require an intermediary, a sort of a bank who is helping to issue these securities. And there, I think it's important, like to know or to understand also what is actually the real value proposition of blockchain in this sense. And in our view, Arnab, you know it very well. I think the main value proposition is to create like a direct link between the issuer and the investor when receiving security tokens. Mainly like to reduce intermediary risk, like to reduce the risk of clearing houses that they made mistakes, of transfer agents, of brokers and depositories, and secondly, I think reduce also costs, right? Reduce costs for the issuers, because you have to pay all these intermediaries, obviously, to make use of it. And finally, transparency, right? So blockchain technology provides huge transparency over all the transactions happening, and this is something that has to be reflected, I think, finally also when you issue security tokens, that you have like these three pillars reflected in the setup, right?
Mm-hmm. I think this is very important, because when there is also in January of this year, the French regulator AMF has proposed some kind of analysis on the security token according to the existing MiFID structure. And there also they talk about a lot of value proposition, but when I see different approach like German, Luxembourg, French, and other part, somewhere I have a fear that the understanding of the real value proposition of security tokens have a different meaning, right? What do you see? Because you have a legal background, you are qualified in Germany, you are qualified in Luxembourg, worked in this industry for more than now, I would say 10, 12 years. From that perspective, and also you have worked in the, I would say in the blockchain space, we are working together from 2017. Where do you see the real value proposition of a security token for the industry as a whole?
As I said, I think like the main advantages are reducing risk, reducing costs, and increasing transparency. But more concretely, for a security to be issued using blockchain, and using also like the existing frameworks in Europe, it definitely has to be a transferable security, also to make use of security tokens on the secondary market. And in this sense, we have a European directive, the MiFID 2, currently in place, which is like the main anchor point. What is like actually a transferable security? And there are certain conditions you have to be which have to be fulfilled. And one is transferability. And transferability means obviously that you have a right, and you can transfer it to another person. And then a subcase of this transferability is negotiability, which is like the ease of the transfer, that actually you can trust when I receive this right, that I don't have like to go back into the whole transaction chain and verify whether there has been a default. When I receive the token, I need to be the owner of the claim against, for example, the issuer. Yeah.
So like in the US, in 2017, 18, a lot of people, talking about how we test and those things. And when in Europe, I think the structure of this definition of transferable securities are very defined, like very well structured, right? And as you mentioned right now, is that there should be an element of transferability, and there should be an element of negotiability. Now the question comes, can you issue a fully digital instrument as a transferable securities? And what do you think about that on this point?
Yeah, and I think this point is interesting, because it sounds so technology crazy, right? But this question existed for thousands of years in law. It was like you have always like a sort of a right. You have an ownership of a house, or you have a claim against somebody else, and the question was always, okay, I know I have this right, but how do I prove it, right? And that's why humans have started to use a stonemason and put it into stone in the beginning and say, okay, here's like this right is written, so it's a proof. and you can rely on it. And later on with the invention of paper, they put it down on paper. And now we are living in a digital world. Now we put this information in a server, and the next step, and that's where we see it. The server is obviously still maintained by a single entity or a consortium, but it's not distributed all over the world. So I think here blockchain comes very much in with an immutable transfer chain, which is maintained on a distributed network, which replaces all this trust into these intermediaries, right?
Now, I think one question that I think becomes very relevant here, and we have also faced these questions in the past, is you have this SQL database or the cloud or NoSQL database, something like that, right? Mm-hmm. Is there any legal bar to issue this kind of digital rights or something in a form of distributed ledger, which is a blockchain, but it can be done on a cloud base? So is there a technology specific approach of the regulation right now that says, okay, this kind of technology you can adopt, or this kind of technology you cannot adopt?
Yeah, absolutely. And I think there definitely the European legislator has been very neutral, right? They did not write any specific point how to maintain your securities register when you want to issue the securities. Another point is, and other regulations coming, like the central securities depository, where it's a little bit more doubtful. But in general, I think it has been technology agnostic. And interesting also, that's why I think we are also in Luxembourg, because of the very flexible Luxembourg corporate law, and which is mainly based on French and Belgium law. And there is like this idea that, okay, I have this right, and I can maintain like this right register how I like to do it. While in Germany, for example, a security was always linked to a sort of a paper document. So the German has been a little bit more concrete. That's what you mean. So let's write exactly how you maintain actually your securities. Germany did this a long time ago. While,
so it's a paper. So you require to have a paper in Germany for those kind of instruments.
Yes, just like amending like this law for debt instruments, but in general you need sort of a Urkunde to prove that you have the ownership, and this is actually the anchor point for also for the negotiability, right? And in fact, it doesn't work like that, but that's how it is written in the law. And in Luxembourg, in the French law, you never talked about paper, right? You talked about an instrumentum, like from Latin, which is just like a mean. Okay, but I said, okay, you have first you put it in stone, then you put it in paper, you put it in liquid, whatever you put it, it doesn't really matter as long as you can prove that you can rely on it. And I think blockchain technology is probably the best technology to prove that this information is actually recorded immutable. So you should be able to rely on that, right?
I think it's a very important point, because the idea is of the entire blockchain is you have the information transparently visible, accessible, and it can be audited whenever somebody go and have a check. And this immutability aspect brings another layer of protection, that any information can be audited. And then for the regulators, I think it's one of the biggest benefit even a cloud-based solution cannot provide, because you can change the person who is in control of the cloud server. But in blockchain, this is hard. And somewhere when I understand, when I hear, and also STOKR is operating in Luxembourg from 2017 on this point, the idea is we already support it. STOKR is not something that we have started today. It has started quite some years back. And we have already tokenized a number of security instruments. And this is very crucial, because not many places I read about this element of corporate law, right? And what I understood, what you're telling is, according to the current Luxembourg corporate law, you can maintain the investor register completely on the blockchain, digitally completely. Is it something that you are saying?
Yes. Basically, that's what I'm saying, and I also wrote a very detailed article about how to use existing securities laws in Luxembourg for tokenization, in case anybody is interested in that. And there I also put out what kind of securities there are under Luxembourg law, and which securities can be used. And I think that's like the most beautiful use case of blockchain is as a registered security, right? So the issuer can hold its own register of the investors, right, with the help of blockchain. So what blockchain does here is simply saying, okay, how many have been issued? There's a timestamp and like a type of transaction, and all the private data can be kept in a dedicated separate server. So blockchain is not, it's just like a mean of assistance in the end for the issuer to keep really track of his issuers, and that the issuer of his investors, sorry, and that the investors are also eligible, right?
Yes.
For being invested into your company for KYC, AML purposes, but also for regulatory purposes on a country base. And that's all possible when you allow like the issuer to maintain its register with actually the help of blockchain. Yes, and I say it's definitely possible under Luxembourg law. Yeah.
That's very interesting, because the idea is, if you can maintain the investor registry completely on the blockchain, the first point I would expect is there is a very less chance you can corrupt the data, because it's auditable any point of time, and the second point is very transparently available in most of the blockchain infrastructures. And one of the biggest value addition over here is, as you mentioned, investor can be their own custodian, right? And they can manage their own securities account, which was not possible before.
Yeah, and that's coming back on what we have discussed in the beginning, like that's the value proposition of blockchain, right? And decreasing like the risks of the intermediaries, and I think that's also what people look for, right? They want to be in control of the financial situations, and ideally also of their investments.
Perfect. No, I think for the audience also it's very interesting to know what Tobias just now mentioned. This is I would say quite abridged version or concise version of what Tobias has written in a very interesting article. You can access the article by following the link below. If you are, in the financial service industry, or you're a professional in the blockchain space, or also interested in capital markets, alternative finance, this is something that you should know. And this is something that you should talk and think about, because when we are talking about the future of capital markets, we are talking about cross-border capital markets, right? National, regional focused capital market cannot have that impact, and that's what we are seeing also. Again, the discussion of EU Capital Markets Union is being discussed, right? And we also saw the recent report of different authorities that IPOs in Europe and globally as a whole are declining, right? And you need to provide, and one of the biggest factor is the cost of issuance. And if we can reduce the cost, if you can increase more efficiency and transparency with the use of blockchain and with the use of technology, and this is something, the very interesting point we discussed here, it's a technology agnostic structure. Today's blockchain is tomorrow something else efficient that comes and replaces that. The moment we have this agnostic behavior, I think we provide much more efficiency.
Absolutely, very well said.
Thank you, Tobias, for joining today's discussion. And
thank you, Anat.
Thank you very much. And for the audience, if you have any questions, any information that you want to know after reading the article, please drop us an email at hello@STOKR.io and we will respond to you. Thanks a lot, everyone.
Thank you.